The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. I follow 3 great hours. Starts off with John Logan, goes to Steve Rose, and Friday today we also had Tom O'Brien and Daryl Martin, and just fabulous programming. I hope I'm going to be able to be included in that for this hour, do my best. Then, of course, we've got Nico and Paige, just all about your health. Then we've got Daryl back, and then we've got Dave White. Just great shows. And then, of course, wrapping up with Tom O'Brien and Dave White. So this is the Friday to get it all. Why is it important today? Look, I'm showing the Dow chart. This is the daily. I have no choice but to call this leg B in the Chapman wave. I mean, I can think anything I want, but that's what I've got to notate. And that says that we cannot get a high for a top until we get into the leg D. So this is in the Chapman wave methodology, real simple. You look for the lowest, most identifiable low bar. If the technicals and everything confirm, you go from a buy signal to a buy mode. A buy mode instantly states emphatically that there should be, not, it's not an implacable thing. This is something we've got to talk about in terms of a methodology that has a tremendous rate of success. But that means that you might be the one that on the very day that it doesn't choose to go to a D, it fails at a C. That's the way it goes. But most of the time, B will go to a C to a D. And that means we haven't even made a peak. If today's high, right now we're at 17,381. 17,382. Well, you can keep going like this. 17,383. Wow, the buying pressure is intense. At this particular point, we have to wait for Monday to see if there's a lower high bar. Very often when you close at the high the next day, see some kind of consolidation. That is, you close at the high with a very long candlestick, which this is what we're doing. In fact, this is a no-wick candlestick. We started off at the low. And the low was, the open was 17,208, and we're now at 17,380, and we're close to the exact high. So this is just the first hour and a half, not even 2 hours yet of the session, and lots happened. Got a tremendous amount to go for the rest of the day. My gut feeling is that in the near term, we are getting very close to overbought, but that doesn't tell you how high we can go. It just says we're getting a little overbought. That if you're about to initiate positions, we actually initiated a position this morning, and so far it's doing quite nicely. But it is one that we're very familiar with, and we've got great profits in it. And if we miss out, we'll lose 2% maybe. It's a risk on a half position. That's the way it is. But one of the positions we've got is up tremendously, up in the 23% or something area. It's just acting beautifully. A leader, in fact, in the sector. So what I'm going to do right now is I'm going to run the numbers. Oops, the numbers disappeared. Let me just go over here. The Dow is up 183 at 17,378. The S&P is up 20 at 2015. 2015, remember the low was 666. We're at 2015. The comp index is up 63 at 46.29. I said I didn't expect. Well, no, I don't want to talk about it because it's just really not a good thing to talk about. But the QQQ series is in the year of its all-time high. Fabulous move up. Actually, let me do this while I'm running the numbers. Actually, you know what? While I'm running the numbers, this is Technical Friday. I'm going to take a moment here just to run the numbers with the charts. You know what I'm going to do? I'm going to go to Lou in Nashua right now, waiting online. And Nashua, hi Lou, how are you?
Fine, thank you.
Good. Lou, you got a question about corn.
Yeah, where do you see it going?
So now I'm looking at corn, but I'm looking at the continuous contract just as a very quick thing because I've got it notated in the monthly, but I also wanted to look at it. Let's see, A, B, C, D, E. I think it's getting a little choppy in the daily chart. The weekly chart is in a very strong leg, A to the upside. Now, are you asking me now? So your question is, if I'm looking at corn and I do not know whether or not you have a position, what would I do? Is that really the question?
That's it, yes.
Okay. My answer to you is that corn has made a significant low off the bottom, that the commodity index itself, which probably includes corn, is going to lower lows and lower lows and lower lows. It's just the way it is. But the way it's coming, the monthly chart on corn, the long-term contract is really not that great. But the daily and the weekly contracts have really improved. My suspicion is that we're going into one of those formations, you probably heard me talk about it, where it looks like a, let me just go to the gold chart for 1 second just to show you the pattern that I'm talking about. In the gold chart, the GLD is plummeting. It's down 3.35, breaking that 114 three times hit major support over the last year, plunging through it. This is the candle I'm going to talk about a little later on. That is the most important candle. But you see the way that gold, the GLD had a very strong, if you're looking at my chart, folks, in Tiger TV, you will see that the low from 114.68 back in, I think it was June of 2013, went to a very strong leg A, then it went to a B, and then it stopped at the 200-period moving average, fell from peak B minus all the way back to the 114s. Well, I'm suspicious of this move in corn. I just want to go to the corn contract itself, CZ14. Same thing. Okay, I have no problem. So, December corn is at A, B, C, D in leg E. I'm thinking that the MACD and stochastic are very strong, that corn could pull back from 371, which is at right now. It just made a high yesterday of 381, round number high. So it's pulled back 10, which is quite a significant pullback. Not if you're talking about how sharply it's gone up. This is what I'm going to say, Lou. I think that it's worth taking a stab on the long side. I know you like to play it via the options, or would you play it via the contract? Options. Okay. Then I would not. It's a little bit risky to do anything right now, but at the same time, if it doesn't pull back, it could actually move because of the way the markets are starting to move now. It could even generate another buy signal from here. My eye says that there's a good chance it's going to test the 364 to the 361-ish area. That's where I would buy a call. But I don't want to tell you whether it's a November, December, or the January contract. My thinking right now, based on the weekly chart, is I'd probably want to go timeout, and I'd like to go to December on the December contract if I was buying options. And what I would be doing is I would treat that. I don't know, you like to buy just one, maybe two positions, and then that's it, right?
That's right.
So if you're going to just buy one because you want to make your risk to reward the best you can, if you have patience to wait for next Wednesday to Thursday, my thinking is that round about that day, if it's going to pull back at all, you'll be able to pick it up at about 361 to 359. That would be perfect because if it pulls back after that, you've got time in your hands because the weekly chart is suggesting that at some point within the next 3 to 4 weeks, there should be a retest of the 376 to 381 area.
Right.
So does that make sense?
Yes. So where do you think it will drop?
Well, I don't. It needs to drop at this particular point to get in, and I would suggest that in that 361 to 359 area, that's where you look at it as a potential long position. If it starts to pull back, the candle that I'm looking at in the December contract is the candle of the 27th of October at 348.5. That really has to hold no matter what happens. If that starts to get taken out, that call position is going to shrink a lot. That's why I'm suggesting rather than to grab it now saying, hey, it could accelerate higher, take a chance that you might miss it altogether, but I'd much rather be buying it towards 360 than at 371.
Okay, that sounds great.
Okay, and you know what I'm going to suggest? Maybe next Tuesday, call me again. Let's look at it together.
Great. We'll do.
Thank you very much for calling. Always appreciate your call. Let's go to Joe in Boston. Joe, how are you?
I'm well, Basil. How are you?
I'm well. You know what I'm going to do? Just as you're online, let me just finish some of these numbers because I usually do that in the first. I just want to say the comp index is up 62 at 46.28. Gold is down. Really, remember I've been talking about gold for I don't know how long. I said I don't see anything in the way of a buy signal in gold until we get somewhere down to November or maybe even December. And I still think that way. And I hate to say it, but I really think that gold has had a major move to the upside, had a major move to the upside. And then I still think that gold needs to, I would not be surprised if we start to see the to let sign or to rent signs on all those little those shops that have opened up where it says buy gold, sell gold, because they all got in at what I thought was the top. And that's just kind of the nature of the game. I hate to say it because I see the guy I keep passing down on Washington Street. He seems to be pretty busy. I hope he stays busy. But that's what I'm thinking about gold. And the dollar at this particular point. Remember yesterday I was talking to... Oh, who was I talking with? We were looking at the dollar, and I said the dollar, it looks to me like it wants to break the weekly candle with a high of 86.75. If it goes to 86.76, it's in leg D, and that's exactly what's happening. It's in leg C in the daily, which corresponds to leg B in the Dow and the leg B in the S&P. It's still only in the QQQ series. This is leg B with a gap up. So we're looking at possibly next week towards Thursday or so where I would maybe start to get signals that to say we're making at least a short-term top. And I want to go right back to you, Joe. Joe, what's your question? Sorry for that.
Yeah, I wanted you to take a look at KSU more on a longer-term basis.
So, now?
What?
Did you buy KSU earlier or not?
No. I have no position. I just wanted to look at it. It looks like it's trying to build some strength here to get up over that 125.
Now, this is very interesting to me. I'm going to be having to spend a lot of time this weekend on chart formations. The chart formation that we have seen this today because of the break to new highs in some of the indices and the way the weekly charts are formulated in many of the indices and many key stocks, and I'm including now KSU, which is Kansas City Southern. It is a utility company. It is trading right now at 122.36, up $1.57. That weekly chart, ABC. Oh, good. I got a break coming up. It'll give me a time. I had this all notated. I must have lost it. I'm going to do it again. Joe, hold on, because it's getting right to the resistance area in the monthly. That's your question, I bet. I'll be right back with Joe. Dow's up 185, S&P's up 21.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're on with Joe in Boston. And, Joe, I hope you don't mind. I want to take a moment here to also do something else. I have spoken about him over the many, many years, and I had a tremendous respect for what he had achieved. I know that it's a tough business, and I also know that you rile some people up the wrong way. But in order to achieve dreams that are of certain magnitude, you got to really push and shove. And I have to say that I want to give a moment here of praise to the late Mayor Menino. He was here in Boston. The whole city skyline has changed because of him, and has really changed for the better. He's got areas that were really underdeveloped that have become developed. Maybe later on we'll grumble and say, oh, man, too many things are happening. But I think that what he did, it took a lot of courage, and he was not an educated man in the sense that he had gone to Harvard, even though it turns out that he was teaching at Harvard towards the end of his life. The fact is that he was a real hands-on kind of character, and he had a particular vision for Boston, and he worked really hard to achieve it. So I just wanted to give him a moment there to say thank you, Mayor Menino.
I agree.
Joe, let's look at this together. The KSU, which is Kansas City, I want to keep saying the Royals, but Kansas City Southern, has gone in the daily chart. It's got this incredible inverted Chapman wave Roman candle, which says that if you've gone halfway into the wick, either up or down, there's a good chance that you're going to go and retest close to the top or break the top or close to the bottom or break the bottom. And very often, and I've just drawn this in gray. Let me just check the chart so that I can see what you can see. Yep, that's it. So this grayish area, okay, it's outlined right there at the top of that candle with the candle of the 13th of October at 124.68, which also has a bottom at 111.29. My rule of thumb is that if certain conditions are met, you should be able to get a Chapman wave buy signal to buy mode within the rectangle going to the upside to retest the top part. It doesn't say it has to go above. It says towards the top of the candle. That's exactly what we got in a rather quick peak A, peak B, peak C, peak D, number one. Number two is that it's got a D in the a peak D, a second. I'm so pleased I had a chance to do it because I might have missed it if I just did it by eye. It has leg D and then peak D in the weekly chart, which is also outlining the same thing. Well, it so turns out that the monthly chart, which has veritably walked the 9-period exponential moving average all the way to the 2013 high of November of 2013 at 125.96, and then came down sharply to that low of whatever I said, 111. 92.94 in March of this year, has in fact also got the rectangle formation with an A. Oh, I hope that's an A. 108.87. Yes, ABC, and this leg C. 125.96, 124.68. Oh, this is so interesting. What it's saying is that Kansas City Southern is getting to a very strong area of resistance, and that even though there could be a push to the upside, and I really have to put this into the context, once again, I'm going to move away from the question. The question was about Kansas City Southern. I'm going to the XLU, which is the S&P Select Utility Spider Fund. I don't know if I suspect it is in that fund. I could do a quick search right now. But the fact is that the utilities are at all-time highs. Then, if I had said to anyone 5 years ago that the Dow was coming off its low, but was way, way off its all-time high, and that the utilities had a high of 44.66 back in 2008, had gone all the way down to, at that point, let's call it the 29 to 30 area, would go back to its all-time high, and they would go in unison, and almost to the day would make all-time highs. That doesn't usually work out quite. Yes.
It's in the IYT.
Oh, good. The transports.
The railroad.
This is the railroad. Oh, of course it's the railroad. Sorry. What was the... Isn't there Kansas something or other?
You were thinking of maybe Southern Company.
Oh, you're right. Absolutely. Oh, thank you for correcting me. I'm saying to myself, something's wrong with this chart. Well, if I said to you that the Dow would make an all-time high at the same time as the transports were making a new time, an all-time high at some point in the future, you'd say, yeah, that's Dow theory. That's what you expect. So let's go back. IYT had a horrible couple of days, and now it's come back and oh, this is different. Joe, can you hold on?
Yes, sir.
Because I wanted to get to the transports today.
Let's do it.
The excuse. I'm going about it in a very circuitous way. We'll be right back, folks. Dow's up 200.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. TLT is down 59 cents at... Hey, what happened? Why did you just suddenly move this away? Give me 1 second here. Okay, there we are. Okay, TLT is at 118.97, down 59 cents. And we've got the GLD down 317 and 112.02. And the dollar we saw is at 23. Whoops. The dollar is at new recovery highs, and we are on with Joe in Boston looking at Kansas City. I can't believe that I forgot that was the, of course I know that very well, because it goes with CSX.
There's a lot of symbols out there, Basil. It's easy to get confused.
Right. So CSX is still doing very nicely, but the one that I'm looking at, which is so important, UNP, which is Union Pacific, is in A, B, just squeaked to a C today. And so let's go back to this. Now, your question is, where are we? What are we doing? And what would be the outlook if certain parameters were hit? And I would have to say to you, for me, it's really quite clear that if there is a week, and any week next week or the following week, where there is a pullback, and then the following week there is a new recovery high, to me, that confirms absolutely that the weekly charts of the IYT of, let me go back to KSU, am I in the right? Yep, KSU, Yep, KSU would have to, and now KSU is a little different because it needs to clear the 124.68 high. It really needs to get to 127 to 128. If it does that, not only has it cleared all the resistance levels, it's saying I'm making a level that takes the base to a new high. Now, I have to just tell you that upside is very easy to do because if you're breaking to new highs, unless you store right at the level where you've got a V-shaped pattern or a cup formation where the left high, the lip on the left side, is now a barrier, it's the downside that I need to speak to you about. So if Kansas City Royal in the next 3 to 4 sessions, going to say next Wednesday, after the election, next Wednesday, if it pulls back and it closes underneath 119.52, let me call it 119 to be safe, then I'm looking at it as a stalling formation, trading in a range that has upside limit towards 125, but you've got to be careful because the 118 9-period exponential moving average, which has now been hit many times in the last 2 months, that's going to become really important because if it turns into resistance, then I have to look at the IYT and say, hey, you've walked the 9-period moving average. We've had a tremendously violent a month and a half where you've gone above the 9 EMA, down, and now you're back over the 9-period moving average in the weekly chart. That's saying more and more that the 9-period moving average in the weekly chart at 151 to 150 in the IYT, that's the iShares Dow Jones Transportation Average Index Fund, that's going to become like a magnet. And
it almost looks, on the weekly on KSU, it almost looks like a stork leg. There's an oval forming up at the top there.
It's a very long,
it's a big one.
Yeah, it's actually, it's a little different. I don't know if you were listening, but I had a call the other day from, was it Ernie? Who called me? Yeah, I think from Dearborn. Mm-hmm. And we were looking, and he wanted me to look at my chart and draw in an expanding wedge formation.
Oh, yeah, I did that. I did hear that call. He thought the Dow was going to he thought the S&P was going to 600 or something.
Right. So it would go all the way back to the lows. But now what's really important, you get in the expanding triangle. Mm-hmm. I prefer to be as faithful to a chart that is telling me, and it's telling me more to look at the expanding wedge than the oval pattern, because there is so much in the way of resistance. And let me just talk about something else. In my technique, what I do is I take channel lines, and then I draw within it what I call an inside line. And that inside line, let me get rid of this one. I don't like too many lines. It gets messy.
I really like, Basil, the cycle work you did, especially yesterday, about the whole 2015 into the next presidential cycle. I think that holds a lot of weight, and that may tie in, this is just my input, with the rising rates. So if rates don't really start to go up till late next year, that might coincide right with your timing.
And what will happen with rates is that only when it persistently breaks a certain level that it hasn't been at and hasn't suddenly come back down again, will people get really nervous. And I don't think it's the Fed speak, it's the Fed action that's going to be most important.
Yeah, so, maybe just a slow grind up and get more of the public in, and then, until late next year, you got to start becoming very cautious.
Just think about this very moment as we're speaking right now. I bet there are people listening who are saying, I'm just underinvested. I know that. Look, I do this every single day, every minute of the day that I can, and I've done it for years, decades, and I'm saying to myself, I'm underinvested. And I've got my subscribers. We're doing nicely, but we're underinvested. And
well, the problem is, Basil, is that the pullback, they're so sharp and so quick, it doesn't really give anybody a chance to get in. Yeah, they say, oh, you want to buy the pullbacks, but when you have that type of V-shaped bottom, it doesn't give anybody. It's almost like when real estate pulled back from 2008 to 2009. Real estate only bottomed for about a year. It didn't really give and you couldn't even get a loan. And then it didn't give anybody a chance to really get in at the lows.
You see, that's a really good point.
That's how it happens.
And that's a point that it's worth talking about. It is. I said to a good friend that I often play tennis with, I said to him a while back, I haven't seen him for a little while,
Yeah.
I said to him, look, I'm getting a little cautious about the market, but I don't want you to do anything. What I'm going to say is take a little money off and then put in some crazy numbers to the downside of the favorite stocks that you like or you'd like to add to. And I haven't seen him lately. I know he did that on the last big pullback, and he ended up grabbing some stocks that he would never have bought because they only went down to his price for a moment, and then they turned around. So that has worked. There's going to be a point, and that's going to be the equivalent of, I think it was March of 1929, where there was that terrible pullback, and everybody thought, this is, oh my God. And then what happened? You went to all-time highs to 386. And by that time, everybody got in. That's when all the papers were signed for Rockefeller Center, for the Empire State Building, the works. And I suspect that history doesn't change, that we will go into that phase. I hope it's not 2015. I don't want to see the market going down for 5 years or 10 years after this. I'm just hoping that, in fact, what happens is the rotational aspect of this just keeps this market powering higher for quite a while longer. But in the meantime, your Kansas City Royal, KSU, let me go back to that. What I'm looking at is on the daily chart, yes, it's a leg D, and that's saying it's going to probably stall a little sooner than the others, and it could go into a trading range. My favorite would be something like a UNP, which is, in fact, a leader and is doing really well, and is now only in leg C to the upside. I suspect next week I'll be talking about starting short positions, as we often do in the Dow when it gets to a peak D or an E. So hope that helps you, Joe.
Thank you, Basil. Have a great day.
Always great to speak with you.
All right, take care. Bye-bye.
Thank you. So, folks, this is what I want you to do. Let me just, I had a question here. Always get these questions right towards the end. KSU's Railroad. Yeah, thank you, George. You always correct me, and I appreciate that. Same as CSX and UNP. And, yeah, CSX and UNP are doing very well. Okay. Oh, good question. Michael asks, well, actually, he gives me a whole thing about the similarity between the candles forming to 2008, 2009. In Japan. I'm going to read this a little more, and I'll try to get into it Monday. He has some really good points. I don't know if I can do it right now. I don't want to do it in a rush. It's a really great question. It's really a statement. Julie wants to know, does a blow-off top trump the Chapman wave? Now, that's a good question, Julie, but I will still be doing my waveform. I might personally miss it because I'm expecting something else, but in the end, you will see that you will get to your D, E, or F when we get the blow-off top, and it'll probably be including a monthly chart because that's what happens. So the answer is that I can, maybe I'll do that. Maybe I'll do that sometime next week when we get a little time. I'll show you the chart, daily chart from 1920, and you can make up your own decision whether or not it works. Then the next question was, James wants to know, James. Wow, this is interesting. This is junk mail from someone called James, whoever. 70% stock market crash imminent, warns CIA insider. I think I've seen this at least for a couple of thousand points to the upside. I ignore those. So, and the next thing is from my son. Good. Yeah, good. Okay. Let's get back to our story here. The VIX index. We can talk as much as we want. I've used the VIX index quite successfully for our positions every single. Let me show you what I do. I think this will be very informative. I'm going to go to this chart right now. Is it that one? Is it that one? I'm there. So somewhere there, can I see it? No, I can't see it. Click on it. So it's not that, it's this one. So I'll double click. Oh, there it is. So yeah, this is what I show my subscribers every day. Let me go right to the Dow chart. Look, here's the Dow chart. So not only do I do a little excerpt in there that something that I type up, I follow it up that night or the next morning before I send it out, and that's my first chart that I send out about 6:30 or 7 in the morning. And what I do is I show, look, yesterday I discussed the parallel not in the price, but in the chart formation of the beautiful, those candles. Look at those nice strong candles, those white ones. And look at the black candle there. Just one big black candle, then another one before you made peak C. Big move up. And I underlined it. And then I completely forgot this morning to explain to my subscribers what those thin green lines are over there. I spent so much time on it, then I had to rush because I actually had to do something very early this morning. So I got this out, and then I completely forgot. That's the measured move. And that measured move takes you into the high 17,300s. Where are we now? We're in the 17,300s. Let me show you the real chart, and I'll update this. I'll update this for Monday. In fact, I'll be sending out my charts over the weekend. If anyone wants to sign up for my opening call, you get some great charts. I start sending them out over the weekend, and now that I'm back, I'll be able to send out even more charts than usual, because this is a very important period. There, that's what I'm looking at. Remember, I drew in that little channel over there. We've broken to the upside. This is still leg B. It's at new high, so it has to be blue B. In other words, it's not gray, meaning it's a retracement failure possibility. It is new. It is a buy mode that should, under every circumstance, go to at least a D. Now, when I do this, normally what I do is I go from the low bar to the falling axis, declining, expanding wedge, to the dashed line, and then I go to the previous peak, trough, and I start the new move to the upside. And as it increases, so I will raise this bar. The best possibility, which doesn't often happen, but the best possibility is to go from that line to the next extension, and that takes you to 17,600. I don't like to do that. Oh, I could just say it right now. We're going to 17,600. And if we miss, I just don't mention it again, because that's the way it goes in the technical analysis business. I do not like to do that. I just want to go step by step. When we approach and circa, we break over a certain level on the upside or under on the downside, like in gold, that 114 area. On the GLD, it means something else. Now I can look at the new levels. Otherwise, what's the point? The point is to go step. You can't go from A to Z in the market. You have to go A to B, B to C, C to D, C to etc. So in this particular instance, the next level, I would use the 9-period exponential moving average right there, that 9 EMA right there, and say, okay, practically on the next level would be 17,440s. That would be my target. A pullback maybe next week, Monday. And then maybe there's no new high Monday, but Tuesday there is. And then Wednesday there's a pullback. And Thursday there's another high, and that goes to D. We'll see. But in the meantime, I just want to give you the technical tools. Look, the MACD's amazing. It looks beautiful. The histogram, beautiful. Look at the stochastic at 95%, beautiful. Now let me show you something else. I spoke about this for my subscribers, and I'm going to do it again. I spoke about it yesterday, I think, or the day before. I said I had a high volume low bar. I called it a climactic low bar volume reversal. Right there. It wasn't the highest volume, but it was enough to say we could have about 28 sessions to the upside before you retest 15,855, making some kind of an arch formation, if that's the way this particular volume and candle is going to work. I'll come back in a moment and we'll talk about it. And, I got other people waiting. Oh, my goodness, I didn't see. I'll be back. I'll be back with Brent and Dan. Sorry, guys. I'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Dow's up 164, S&P's up 18, and we're going to go straight to Brent in Martinez, California. Sorry, Brent. How are you doing?
No problem, Basil. How are you doing today?
I'm very well. You'd like to know about?
I'm calling about Baidu. I have no position, but I am projecting top to come in between around close to where it's at, about 245 to 250. I just wanted to get your opinion as far as what your counts were on daily and weekly.
The 120-minute chart is making a leg D, maybe a peak D as we speak. The daily is in leg D. That's what you get, right?
Yes.
Okay, and the weekly is the one that's fascinating because of the number of charts that have broken out and have a possible D, E, or F /A. The one side says, whoa, this is very negative, and the other side, whoa, this is very positive. I like to go step by step, and I go to the most conservative side first. And it says if it proves itself, then in this case, Baidu, BIDU, is trading at 239, up to 97. Had a spectacular day yesterday. Had a gap up today. A Friday gap up to leg D is always something I'm nervous about in a stock because it invariably pulls back the following couple of days. I think right now on Baidu, did it make a round number high? Let me just double check what the high was. The high was today 242.62. I don't see any round numbers at all. Oh, yes, yesterday the low was 222. So I'm going to do this. Because I still have some further upside to go in the Dow and the S&P and the Qs going into next week. But there are a couple of very important stocks. We just looked at the IYT. We looked at the at Kansas City as a in a leg D as well. And GE's just made a peak D. I'm thinking that it's going to be a mixed market for a couple of days with just nominal new highs. We're not going to go all that much further to the upside just on the shorter term, and then we might see a pullback. Now, at 92% in the stochastic and the MACD very strong, you often play the option rather than the short position sometimes, right?
Yeah, I would buy puts out pretty far out, at least a couple of months out.
You see, wow. How much higher would a couple of months out? I know exactly what I would do. I would be thinking in terms of, you know what I'm going to suggest? If you're going to do anything, you might miss 1 or 2 points by not doing it today, but I would suspect that Monday or Tuesday is probably the best time to do it. I would have the patience to wait for the general market to give some kind of a signal because it's acted well with the market. So I know you might miss a couple of points, but I'm going to say to you, hold off if you can. Hold off a couple of days. Maybe Tuesday we can speak again about it.
No, that was my plan. I had no intention of doing it today. I think it could go a bit higher. Yeah, that's my target.
So let's do that. Thanks for calling. I would like to get to Dan. So thanks for calling,
Sure.
Brett. Let's get to Dan. Hi, Dan.
Hi, Basil.
I'm going to make it real easy. You got a question about TVIX, which is
I went in this morning.
You went in this morning? I think that the TVIX has made the Eiffel Tower pattern. This is going straight up. We went to actually a C in there. That's really a DEF. Well, alternate count. In the daily and the actual VIX index is that's the key, and that went, in fact, to a peak F, island reversal to the downside. My suspicion is that the TVIX, now it's just a suspicion, I need more evidence, is within 30 to 40 cents of a low that could give you 60 to 80 cents on the upside, or even $1 to the upside. So far, that's good. I think that it's very close. So you might be a tad early, but if you just started a position, I'd say that that's good. So let's look at that, and I will talk about it more on Monday and Tuesday, okay?
One other thing, would you mind looking at an inflation versus deflation scenario in your newsletter?
Okay, I will do that. Thanks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.